very kindly jumped in only half an hour before this presentation actually. Guido van Stijn, Managing Director at Aurus Technologies. We've heard a lot about technology being involved with supply chains and possibly in settlement and clearing and provenance and things like that, but we actually have in front of us a real life example of a company that's doing it in terms of making gold digital, making it available and accessible. Guido, give us a story about your background. How did you arrive where you are? And give us, in a nutshell, something about Aurus and what you're doing, please.
Yeah, thanks, Ross. Well, I've been working in the precious metal industry for approximately 15 years, mining, brokerage, and since 2018 involved in Aurus. Before that, I worked in structured finance solutions with Dutch pension funds and the biggest bank in the Netherlands, blockchain based also. And then we set up Aurus. And Aurus is a UK member-based association where we actually do multi-asset, multi-chain, blockchain-based, decentralized commodity ecosystem. That's what we offer. It's a lot of words to process, but to put it a little bit simpler, it's tokenization as a service for the industry itself. It's multi-asset because it's not just gold, it's silver, it's platinum. We are also working with several entities and governments also to look at soft commodities to integrate that. And it solves quite a big solution for the market. There's quite a steep learning curve to jump into an industry, which is for most people still a little bit vague. Because you hear about it, you see it, maybe you buy some Bitcoin or Ethereum, but actually you don't are involved yet in how you're going to build something on these layers. It's not super difficult to create a gold token, for instance, but taking out a single point of failure and working together in a decentralized way to make a fungible product, that's actually in the doctrine of blockchain-based technology. That is what we do, we offer for the market. That's also why we are a member-based association, not really a commercial entity, because we assist the market in accessing these new cool areas of not just tokenizing metals, but also the more funky parts in decentralized finance, which is popping in the last 12 months like crazy. It's yield on assets, trading metals against Ethereum and Bitcoin, staking it in pools and getting yield back in multiple assets. That's what's happening right now with DeFi pools. And that's definitely also where you see this industry switching from the traditional market buy and store to a more transactional based system where tokenization puts in DeFi pools go to exchanges, liquidity is provided there, derivatives are traded on top of that. This is the really cool part, and it's also a transition in this industry, but it makes it a little bit sexy again to say it like that.
Excellent. I mean, the idea of tokenizing gold and making it more accessible makes sense. Yet the industry has been rather slow to adopt it.
Yeah.
Why is it? What are the barriers? Why is that?
It's new. It's scary. It goes against a system that has been in place for decades, and the 25 members that we have right now, it has been a steep learning curve. For them also, our account managers really take them hand by hand to educate them in the whole process in servicing their customers, in how this DeFi works, in how the technology behind it works, and also how it can be used on the front end. With vault signer cards, digitally signing transaction from a vault in Singapore to a vault in Zurich, and all these kinds of things. So I think the adoption is slow because it's difficult. It's difficult to understand.
Is it a trust business that hasn't been fully established? That smart contracts embedded with a token for many people is a what? How does that work? Like the metal. Is that the issue here? A conflict in terms of the cultural difference between those that want the actual physical metal and those that will believe, if you like, the system that underpins the blockchain, underpins the coins. Is that where it hinges?
I'm not sure if it's trust. I think it's scary to make the transition at this moment in time, because if you don't use something you don't understand or you do not know, and that's why it's important that we are there to take the industry by the hand and say, hey, you can do this. You don't have to do it, but if you want to know how it works, join it, and step by step. And it gets easier also because, sorry to interrupt, but years ago building smarter contracts was mega difficult. Right now it's getting simpler and simpler. So also the UX and the usability of the systems itself are massively improving. I mean, 10 years ago buying Bitcoin was for most people insanely difficult. Right now you can download any app from the App Store and put in your credit card and process the payment.
I mean, Tom, let me come back to you if I may just for a quick second on this. A question that keeps coming up. To what extent do we think that is Bitcoin cannibalizing the investment world in gold? A little or a lot?
I think in many ways it's it's complementary from many perspectives, right? Right now, whether it's Bitcoin or an aggregate of cryptos in an ETF or whatever, it's a very dynamic, high volatility, speculative market. It doesn't have any of those characteristics yet that gold has in terms of track record, of intraday liquidity, of low transaction costs, and it's of course got, whether we're talking about Bitcoin or anything else, an unproven track record in times of financial crisis and what have you. But I think what's important is really what's coming out of Guido's world is that infrastructure, and how we use that in the gold industry has tremendous potential. Because what we're all about in the financial services sector is liquidity, efficiency, frictionless execution, right through to statement ending up in the client's laptop or mobile phone. And if the infrastructure of crypto can help us do that more efficiently with greater legal transparency and trust between all of the players in the market, then it's got to be a good thing.
It's interesting because through this conference there's lots of almost spot conversations like some planets circling around gold, if you like. Truth is actually they're all interconnected, or will be, I think, in a short period of time. We've heard about responsible sourcing. How do we know it's gold and where it came from? Well, we can use the blockchain for that. How about the trading and the settlement? Well, how about we use far more efficient technology that can reduce the settlement risk? How about creating a market for gold which is digitized but redeemable for physical? Well, it's coming. I did a calculation of the amount of gold held by stable coins, and it's about less than 1% of global production. It's a small number. It gets mentioned worth a mention. Yet it is the future. People have been slow to adopt this. I suspect that this conference is very apposite in terms of what it's looking to address. Change, absolutely. It's on us. It hasn't yet been connected into an ecosystem that makes gold better. But as I said at the very beginning, one person's problem, challenge, change is another person's opportunity. And I think probably when Jeff rolls this conference out in another few years' time, we'll have an even different outlook in terms of where the market's at and what it will look like.